Well, Bill here with the Metals Minute. Today is Friday, July 1st, 2022, 4th of July weekend, Independence Day weekend, and hope you and yours have a great time. We have some difficult news and some good news to share, so we'll try to get the pain out of the way up front. Today is a down day for virtually everything. This morning, as I look, the metals are down, the stock market's down. Difficult situations are finally being acknowledged by the financial regulators and authorities that for many spent much of last year saying that inflation wouldn't be a problem, and if it is, it's transitory, it's just short term, no recession. Well, now we have the recession. And we have the inflation, of course, everyone knows, and they are finally acknowledging that it looks more sticky. The president recently said prices are going to be high for as long as it takes, and there's no real end game there mentioned about when or any timeline. Now, I want to talk to you about a guy named Nouriel Roubini. He is a top economist, a professor at the Stern School of Business. He's done work for the IMF, the Federal Reserve, the World Bank. He's a sought-after economist on Wall Street, and one of the few guys that has been warning about this for a while. And he just said yesterday that he believes that the situation we're in is going to be like a combination of the stagflation of the 70s plus the debt crisis of 2008. When we had that blow up in the economy. He sees this as a combination of both of those things at the same time. And he believes that the situation could get worse than what a lot of the people are saying, both inside of government as well as the commentators in financial media. He believes it can go deeper and longer than what they're indicating. And of course, they keep changing that story, but he's looking out ahead, and he believes that the current, even though the market for the S&P is the worst start of the year in 50 years, he believes that any rallies at this point would be more of a dead cat bounce, which is, it's just something that draws in capital, but he expects it to have more downside for the markets, up to 50% instead of 20%. So keep that in mind. That's the difficult news, the tough news. It's a difficult time out there. What I would have to add is I believe they're trying to create a recession within this quarter, this being the third quarter of 2022. And I think one of the goals might be to get inflation down for this quarter especially, because this is the quarter that the cost of living increases for retirees, Social Security recipients, federal employees and retirees and veterans benefits. All those things are connected to what happens this quarter. So if I ran the numbers, and if everything stayed the same and didn't even increase in price, they're looking at a 7.5% to 8% cost of living allowance that would start in January. However, if they can beat the economy down to the point that they have a minus number for inflation compared to last quarter, they can get that COLA down to maybe 4.25%, 4.1. I don't know if they'll be successful, but it seems like that might be the goal. And then as soon as those quarterly numbers are out, then the tightening will be reversed, the funds will be opened back up, and inflation will rise again after the third quarter, but the COLA will already be established. and so it might be an attempt to save some money on the backs of the consumers. We've addressed this topic before and proven how precious metals is a better hedge for inflation than the cost of living allowances that are allotted each year for Social Security recipients. It's a far better protection to own precious metals because the rate of increase over time of those exceeds all the COLA increases. They're also trying to change some of the parameters that define inflation so they can keep that headline number low. Nevertheless, the cost of things for everyone keeps going up. So even if the rate's lower, the cost is still rising. Now, I said there was good news. Let's finish with that. This is a holiday weekend. Right now, silver is approaching, it's very close to a 50-year trend line of support. There's been only 4 times in 50 years that silver has gotten this close to that support line. And in every case, that has been a terrific time to own silver or to purchase silver, because in the ensuing months and years from that point is when it's had its largest rallies. And so we are fast approaching that 50-year support line from a technical basis. When you graph the price of silver over 50 years, there's a trend line called a support line that it hasn't breached. It gets close to it, it sits right down on the line, and then it begins to move northward in a very traditionally a rapid pace. And things are compressed these days. Time spans seem to be shortened, attention spans are lower. So I expect we're going to see some really difficult numbers over the next 2 or 3 months. And then they're going to turn the spigots back on. They won't be able to tighten for long because of how much it's going to implode the economy. But on a good note, these are excellent times to make those purchases for gold and silver and platinum, palladium. This is a period of time that's offering us a great opportunity, and I believe even before year end, will be a good payoff for anything we're able to do right now. And I encourage you not to sell any precious metals unless you're needing cash. Of course, we all have those times in our lives where it makes sense to sell something. But if that's any way at all that you can avoid that, I think it's a great time right now to be owning, since we're so close to that 50-year support line. Happy Independence Day. Have a good and safe weekend with you and your family and friends. And thank you for tuning in. God bless, and we'll see you again, Lord willing, next week. Take care.